determine what exactly the type of financing that they want to do and what repairs they want to do, and get multiple bids from different contractors, okay?
Is this owner-occupied?
This specifically is an owner-occupied program. I do have rehab programs for second homes and investment properties. So we can go up to a 417 loan amount on those properties, and the loan to values change accordingly to your occupancy. But typically about 20 to 25% down for second homes and investment properties.
What if they don't have the money up front? Because the old FHA, you do have to do that.
Yeah, you have to have the money up front. There are options where you can borrow against a 401k. You can max out credit cards. You can, what I sometimes see is that you can actually borrow part of the down payment from a family member and hold on to your cash. But the underwriters really want to see some reserves there, because their assets are depleted for about 2 months. And the FHA program is designed to get people in homes who otherwise couldn't afford them, because you don't have any reserve requirements or anything like that. But we all know that it's expensive to get a house up and running, and so laying out all of your money for the repairs and then waiting for the money to come back in, it can be a little difficult. You can also, sometimes like local carpet shops and stuff like that, you can actually apply for the financing, like 0% financing for 90 days or whatever, after the fact. But the underwriting requirements are a little more difficult in order to do that. And we typically want to see them be able to, be solvable through the whole thing. Yeah.
So are there underwriting allowances for maxing out your credit cards? Obviously, if you're
actually
doing that, you get the money back at a later date.
Yeah, we don't underwrite off of those debt to income ratios, so we don't account for that. But we can see that you have credit available to use the program. We typically prefer to see the people that actually have the money in the bank, or to be able to get the money from a family member to kind of bridge the gap. I did a 203K loan on my own home that I closed on in March, and I did carpet and tile and paint throughout, and I surprised the borrower. It took me about 60 days to get my money back, and it's a frustrating process. This loan isn't for everybody, and it's definitely not for somebody who's very impatient. I need them to be patient and kind of, you're looking for like an uptone person, like somebody who's really happy all the time, because if they're not, this transaction is not going to go well. It's a lot more detailed, and also you can't really determine the rate because there's so many moving parts through this loan program, that there's so many different moving parts that you can't really determine the rate or how much money they really have to come in with to close. So they're the type of person that can kind of go with the flow. They're looking for a project and to take advantage of the opportunities. But if they're going to be busting heads every time they turn around, it's probably not the best program.
Sean, on that 203 rehab loan, is that folded into the main original 30-year mortgage, or is that separate? On the rehab loan, will that be folded into the original mortgage, the 30-year mortgage, or how?
Yeah, it's a 30-year fixed.
Okay, and so they will have the same rate, or is that?
Yeah, it's actually one loan. You have your purchase money loan and the rehab loan, and that's why it's a little more complicated, and we have to wait to actually nail down the numbers because it gets very specific. They actually get the draw of their money back, and it's lumped in as one loan, and you have one payment on it, essentially, and it's all at the same rate.
Sean, when you say that the rehab loan, you have to pay for, could you have a contractor maybe do the work, and then when he's done, we'll actually have to pay the contractor?
Yeah, what I mean by that is that, like, my contractors, usually you pay 50% up front, and then you pay the rest once it's completed. But what I mean about up front is that you actually have to complete the work up front, and then you get reimbursed for it. You don't just get the $20,000 shelled out and say, hey, go have a kick, like go have fun doing your project. You don't just get the money up front to do with it. You have to provide invoices and document everything, every step of the way in order to satisfy the draw requirements.